So you're looking to build a career in finance, right? And you know that the NISM equity derivative exam is, well, a pretty big deal. It's a crucial step, but let's be honest, trying to master it can feel like you're staring up at a huge mountain. Well, today, we're going to give you the gear to climb it. We're going to crack this thing wide open. Let's get right into it.
You know that feeling, right? You crack open that workbook and bam, 10 chapters just staring back at you. You've got everything from the absolute basics of derivatives all the way to some seriously complex regulations. It's enough to make anyone feel a little, well, overwhelmed. I've been there. But what if I told you there's a much simpler way to think about all this? Okay, so here's the game plan. Instead of trying to memorize 10 totally separate topics, we're going to break it all down. We're going to organize everything around just 3 core pillars of knowledge. Think of it like this. Once you get these 3 pillars, the whole syllabus just clicks. It all falls into place, making it way easier to actually understand and remember.
So here's how we'll break it down. We'll start with why this exam even matters. Then we'll jump into those 3 pillars. First, the building blocks themselves. Second, the marketplace where all the action happens. And third, the system's backbone that holds it all together. Finally, we'll get to the practical stuff, your path to certification.
So, let's start with the big question. Why is this exam such a gateway? Well, think of it this way. It's all about creating a level playing field. It sets a common, minimum standard of knowledge for absolutely everyone who wants to work in the equity derivatives world. When you pass this, you're not just getting a certificate. You're proving you have the solid foundation you need to be a pro and act ethically in the market. All right, let's get into our first pillar, the building blocks. This is all about understanding the fundamental instruments, the actual things that are being traded. We're pulling this straight from the first few chapters of your workbook, and honestly, it all boils down to one single core idea.
And here it is, the derivative. That's the whole starting point. So what is it? A derivative is just a contract. That's it. But its value is, well, derived from something else, an underlying asset. That asset could be a share of a company, a bond, even a commodity like gold. Honestly, it could be almost anything. You have to get this concept because it's the bedrock for literally everything else on the exam.
Now, let's look at the family tree, starting with forwards versus futures. Forwards were kind of the early version. They were these tailor-made private contracts between 2 people. Sounds good, right? But there's a huge flaw. Counterparty risk. I mean, what happens if the other person just doesn't pay up? It's a massive problem, and that's exactly why futures were invented. Futures solve this. They're standardized, they're traded on a public exchange, and, this is the key part, the settlement is guaranteed. Problem solved. Okay, this next distinction is absolutely critical. Futures versus options. With a futures contract, you are locked in. Both sides have an obligation to see the deal through, and that means your potential profit or loss is basically unlimited. But an option? That's totally different. It gives the buyer the right, but not the obligation to buy or sell. See the difference? That means if you're the buyer, the absolute most you can lose is the premium you paid to get that right. This whole idea of asymmetric risk, it's a total game changer. Okay, that was pillar 1. We've got the building blocks. Now let's move on to pillar 2, the marketplace. So we know what these instruments are, but who's actually using them and why? This is where we get into the practical side of things, looking at how derivatives are actually traded out in the real world. So when you look at the market, you'll see it's really made up of 3 main types of players. First, you have the hedgers. Think of them as the insurance seekers. They're using derivatives to reduce a risk they already have. Then you have the speculators, or traders. They're the risk takers. They're betting on which way prices will go, hoping to make a profit. And finally, you've got the arbitrageurs. These guys are like the market's referees. They spot tiny price differences between markets and jump on them, which actually keeps the whole system efficient and in check. You need all 3 for the market to work properly.
Now, it's really important to remember that a huge chunk of the derivatives market isn't focused on just one company's stock. It's about the big picture, the entire market. You've got indices like the Nifty 50 or the Sensex. These indexes act as the underlying asset for some of the most popular contracts out there. This is huge because it means you can trade or hedge your bets on the direction of the entire economy, not just the single stock.
So let's make this real. How would a speculator actually use this stuff? Imagine you're super bullish on a stock. You're convinced it's going to go up. Now, you could go buy a ton of shares, which would cost a lot of money. Or you could buy a single futures contract. This gives you basically the same exposure, but for way less capital up front. That's the power of leverage. And if you're right and the price goes up, your profit gets magnified. But, and this is a big but, leverage is a classic double-edged sword. If you're wrong and the price drops, your losses get magnified just as quickly.
Which, naturally, brings us to our third and final pillar, the system's backbone. I mean, think about it. All of this high-stakes trading, it can only exist because there's a super robust framework holding it all up. A whole system of rules, regulations, and processes that make sure everything is fair, transparent, and that people actually pay up. This is the stuff you'll find in those later chapters of the NISM workbook.
And this backbone is really built on 4 cornerstones that create trust in the whole system. You've got clearing and settlement. That's the plumbing that makes sure money and securities go to the right places. You have the legal and regulatory framework, the rules of the game set by bodies like SEBI. Then there's accounting and taxation, how you record and report everything. And finally, and maybe most importantly, investor protection. It's all 4 of these working together that makes the market a place you can actually trust.
So let's walk through the life of a trade. What actually happens after you hit the buy button? Well, on T-Day, the trade is executed. Done. Now, if you're trading futures, something really interesting happens. Every single day, your position is marked to market, meaning profits and losses are settled daily. For options, it's a bit different. The premium gets paid or received on the next day, T+1, and then, of course, when the contract expires, the final settlement happens. As you can see, it's a really structured process.
Okay, we've covered the 3 big pillars of knowledge. You've got the concepts down. So now let's get down to brass tacks. What are you actually going to face on exam day? This is your practical game plan for walking out of there with a certification.
Here are the numbers you need to know. You've got 2 hours, 100 questions. That means you have just over a minute for each one, so you gotta be quick. The passing score is 60%. But, and this is super important, you have to be careful. There is negative marking. For every wrong answer, they'll deduct 25% of the mark for that question. What does that mean for you? It means wild guessing is probably not a great strategy.
So, let's wrap this all up. If there's one thing you take away from this, let it be this. Mastering this material is not about trying to cram 10 different chapters into your brain. No way! It's about understanding the big picture. It's about understanding those 3 pillars. What the instruments are, where the marketplace is, and how the system holds it all together. Once you see it that way, this whole thing becomes so much more manageable.
Look, at the end of the day, this exam isn't just about getting another certificate to hang on the wall. It's your key. It's the key to the very engine of modern finance. It's what lets you get in and understand how it all works. We've broken it all down for you. So the only question left is, are you ready to turn that key?